Hey, good morning. Leon here. Just wanted to take a minute to talk about what the Federal Reserve said yesterday. The little change in policy that normally during unemployment, the look is to start to increase interest rates, hedge off inflation, keep it far from 2%. But they are going to keep rates down, which is really fantastic for a lot of reasons, right? So people who are struggling and need to improve their household cash flow, they can refinance their mortgages, refinance their auto loans, maybe consolidate some consumer debt and increase the household cash flow. That's really fantastic, and people need that. First problem is most credit unions and banks have not changed their lending policies, procedures, or underwriting guidelines. They're still built for people with credit scores of 660 and above. They only want to lend to really C and C plus, really C plus kind of borrowers. So that's going to help people who probably aren't struggling right now, and so that's really something that we need to look at. We need to understand as lenders, how are we going to change our lending underwriting guidelines and our procedures to actually help people who are really struggling today. We have people who had 700 FICO scores 6 months ago, but now they're probably in the 600s, and they need help. And so really, if you're in the lending business and your portfolios aren't all messed up and upside down already with delinquency, and you can afford to lend, this is the time to help people. And you're going to need to, because as margins are getting crushed, your average interest rate on your portfolio that maybe was yielding you 4%, giving you a really nice return on interest income, that's going to lower, right? And slowly, as you're churning your own pipeline, as you're ratcheting down your own pipeline or taking on new loans at a lower interest rate, it's just going to water down your yield, especially when you're doing this with mortgages, right? As you're putting people in 2 3/4%, 2% 15-year loans. But boy, you're really gonna lose a lot of the interest income. And what's gonna have to happen, both a concern for the consumer, but also a concern for the institutions, is you're gonna have to make up that income somehow, right? So you're either gonna reduce staff, you're gonna try to get as much efficiency out of your organization as possible, but you're probably gonna look for fees. You're probably gonna, like, goodbye to free checking. You're probably gonna look to do things to just get fee income off of people, and that's just not right. It's just not part of the 4 pillars of financial wellness. There should be fees, and people should pay for the services and products provided, but it shouldn't make up for bad lending policies. It shouldn't make up for being piggish and trying to only lend to 700 FICO scores when people are struggling. You know, if you would do the right thing and get a little help, adjust your lending underwriting guidelines, use some of the new tools like bankruptcy indicator, some of the artificial intelligence, so you can comfortably, systematically lend to people in C minus and D. Your margins will increase, right? Credit unions, you can go up pretty high on your interest rate, right? You can go up to a 18% interest rate, lending the right way to the right people. So there's money to be made. You can protect your portfolios. You can put high margin loans in there, as long as you're willing to do the hard work. So from a consumer standpoint, be careful. If you are lucky enough to refinance and improve your household cash flow, systematically save the difference. If you were paying $3,000 for your mortgage and now you're down to $2,500, save that $500. You don't know what fee structure is coming next. If you're a lending institution, take a look at your lending underwriting and your lending policies, your underwriting procedures. Start to lend to people who are C minus and D, people who really need it and struggle. You can get a good margin for it. There's tools and people who can help. We can help you. Just reach out, direct message us if you need anything. Have a great day.